Hello, Jim Adams here. I want to share with you today what I did last month selling options. I actually made over 2,600. This was my 15th month selling options. I started my first month, I believe I made 1,100. I did have one month where I believe I did over 3,000, but the last 2 months I've done over 2,600. So I'm going to actually share with you my trades at the end of this video. And then I'm also going to share what I decided to do with Ark Innovative. So please stay tuned. I think you're going to really enjoy what I have for you. Welcome to Easy Investing Income, my YouTube channel where I share with others how you can actually sell options using safe option strategies. So let's go ahead and get started and jump into it. I do want to mention what I decided to do with my Ark Innovative. I decided to actually close the positions and take a loss. I actually had two positions in two different retirement accounts, and I ended up taking about an $800 loss on each of them, which is probably my second biggest loss I ever had. I did do another video where I shared how I took a big loss selling a what is it, a call credit spread, and that was with Microsoft. So this was my second and third losses. And the main reason I decided to go ahead and sell ARK is I'm worried that it's heading in the wrong direction. I believe that it's still overvalued. It could potentially go down quite a bit more. I also don't like the fee they charge. They charge a 0.75% fee, which is really close to what I used to pay when I had a financial advisor manage all my investments. And then I don't like some of the recent purchases that Kathy Woods has made. And I also read a couple of other articles that had me a bit worried. It doesn't really fit my mold of what I want in my portfolio. So at this time, I did close those two positions. I do have another position that's in my brokerage that expires next month, but I don't plan to open up any other positions. Now, I do own ARK in two different accounts, and I'm not going to sell it. I ended up picking it up, I think, about 2, 3 years ago at around 45 or 55. So just wanted to share that with everyone and why I decided to do that. You won't see that reflected in the trades I share with you today. You may see something with ARK, but it won't be the closing. That'll be in my December review. I also wanted to mention that with all my trades that I did this month, they were very passive. I did more covered calls than I typically do. I did over 9 covered calls. And a lot of those I just literally logged on and onto the system, sold them, and then got back off. It made good premium. So it's a nice way to actually be able to generate some quick, easy premium when you might need it, you know, for a specific thing. Say you're paying taxes or something along those lines. So I've been still amazed at how passive you can make this. I still spend a lot more time creating these videos, which you're probably wondering, well, why do you spend so much time on these videos? They're not very good, but it hopefully they're getting better. Please leave me a comment below if you have any ideas or things I might be able to change to make it a little bit more entertaining, or maybe things I shouldn't do. And then the market's been a bit crazy lately. It's been up and down. It's been going crazy. One of the craziest days I had was the day after Thanksgiving. I ended up picking up some good positions. I sold, I think it was my busiest day, and I think I sold 3 puts and made pretty good money on that day after, but it definitely was a little nerve wracking. I believe the market went down over 600 points. And I think we have more of that in tune for next year. I think we're going to have a crazy 2022, and I do think we're going to have some kind of a correction. I don't know if it's going to be a 5% or 10%, or it could potentially be more. I think the market's still somewhat overvalued, and we're still the inflation, and everything seems to be getting so much more expensive. So I think in order to deal with that, it's important to have securities in your account that you definitely want to own. And that, again, that was related to the Ark Innovative. It's not something I would go out and buy currently, so it didn't fit my account. And I'm going to also go through any of the other securities that might be the same scenario, and look at maybe removing them for the potential storm we may have next year. So again, thank you. I'm going to remind everyone this next part of the video, I'm going to share my trades. And if you decide to try to do any of these on your own, please be sure you understand the risk that's involved with selling options. Do your own due diligence on the companies. And as always, please add a comment, hit that like button or subscribe. I'm still growing the channel. Also, I do have Patreon. I do have two memberships related to it. I've got the lower level, which includes all my trades. I actually, as I do a trade, I'll post it in Patreon so that my patrons can see it, as well as I post all my spreadsheets, my planning spreadsheets early in the week, and then my monthly spreadsheets, both for my retirement accounts and my brokerage. And then for the more expensive, which I think is 25 a month, and the lower one is 10 a month, I do have Discord that you would have access to. And then I also have a weekly meeting where we do a Zoom call and we talk about trades, we talk about goals, we talk about things that can help us become better traders. So I encourage you to take a look. It might be something worth your while. So that being said, let's go ahead and move into the next part of this video where I'll go through all my different trades. Okay, here is my journal from last month with the actual trades that I did. The first trade, which I did back in November 2nd, was Intel. I was able to roll Intel, and it was a put spread from 11.12 to 12.17, and I did that where I widened the spread a little bit. I for the short, I increased the strike from 52 to 52 and a half, and I lowered the farther out spread to 42.5. So I did take a little bit more of a spread, but I was able to gain, let's see, $144. So Intel had I believe during November it had a bad earnings report and it came down quite a bit. So since then it's come back up a bit. So I believe these are out of the money currently. The next one was Procter and Gamble, and I rolled a covered call, and I rolled it up from 146 to 150, and I took, let's see, a little bit over $100 in profit. So I found that Procter and Gamble is been a really good way of earning income. I've been able to do pretty well premium wise, and I did roll it out to 121.22. So I did go a little farther out than typical. And for the PG or Procter and Gamble, the delta was 0.25, so pretty close to that basis of a 20 delta. I took a little bit more risk with this. Um, the next one I did so I only did two trades on November 2nd and did not spend much time doing them. The next one was a leap. It's a cash secured put leap on Citicorp, which all my credit cards are Citicorp. I've been using them for years. I'm quite happy, and it's one I decided to give this a try. I've been playing around a little bit with leaps. I think I have two or three that I've done over the last couple of months, but I did a leap for 40. It's currently at 67. It doesn't expire till 2024. The delta is negative 0.2134, which again is close to an 80% probability it'll retire, or yeah, it'll retire out of the money. Not retire, but expire out of the money. And for that, that was probably my most profitable trade, 218. So not bad. And since then, I believe it's gone up. Citicorp's gone up. So I'm hoping I can actually close that position with a good profit before 2024. So, and then the next one I did, which I did on the 5th. So the only trade I did on the 4th was the Citicorp. So I didn't do much trading. I probably got on and went ahead and found that. I believe a report came out with Citicorp that I was interested in, decided to go with that. So the next one, or actually the next two trades, are both Coca-Cola. I won't go into a whole lot of detail with the covered calls for Coke. I did roll one on the 5th, and then I also did a new one at 60. So I rolled from 55 to 62.50. Coke went up to 57. Coke's been going up quite a bit lately. and the delta I did a 0.23 and a 0.24. So delta again were fairly close to my 20 delta. So I took like a 76 and 77% probability that they would expire outside the money. But I have mentioned in the past, I own quite a bit of Coca Cola. I inherited it, I believe, when I was 15, and the cost basis is so low. So I just plan on keeping it, and this is an extra way to earn money is selling these covered calls. So if you have lots and lots of shares in something and you have a real low cost basis because you inherited them like I did, this is a great way to make some extra money without having to sell them. I'll leave them to my son. He'll inherit them, and he can do the same thing. So, and let's see, I moved those from a 1119 to 119 2024. So I did one way out, and then I did 318.22 for the other Coke covered call. And for both of those, you can see I did quite well. Let me look at that. So I did 168 and 211 for those two. So in those two trades on the same day, I made what is that? Almost $380. Not bad. Um, so the next trade, which was on the 8th, was Ark. So here's let's see, where is it? Right here. So buy to open 120. So this is a call that I have on Ark, and I still do have this. And now that it's gone south, I'm gonna close it because I believe it's like a 90, it may be over 90% profit. Um, One thing I've noticed, and I don't know if you guys have also noticed this, lots of people have been buying options pretty far out. So I've noticed in a lot of cases, you know, I hope to get profit because it's so far out of the money, but I've noticed people have bought puts that are farther out, so it's hard for me to get a low price on a put. Someone might have sold a put or bought a put, and the bid ask is not something I want to do. So it should be real profitable at this point, but it's not. So a lot of times I'm having to wait and let these expire. So that may be the case. It could very well expire. And I did 144.70, and that was the only trade I did that on the 8th of November. So not a whole lot of trading. So the next one was Consolidated Edison. I think that's how you say their name, and it's another company. It pays a really good dividend. Something I do own, and I'd like to own more. But this is another cover call that I rolled, and I literally stuck to the same um, strike price and just rolled it from 11.19 to 12.17 and picked up $117. So a lot of times I won't look at delta if the price hasn't moved that much. And some of these stocks, the price may not move a whole lot, especially if you're looking at something like a Coca-Cola or Southern Company or Consolidated Edison. Um, it may not move. So sometimes I don't worry about delta, and I just roll it out to the next period and make some good money. So not bad for I probably was on the market no more than 10 or 15 minutes, and that was the only one on the 9th. So on the 10th, I rolled LEG, which is Liggett and Platt, and I rolled it from 11.19 to 12.17. Um, the price was around 43.66. So let's see, it was in the money. So I did have to roll it. I did not want to hold it through expiration, or it would have been assigned. And then here, let's see, I made 128 with rolling it, which was less than 30 days. Now, one thing that I like to share with others is I never will roll on the Friday of expiration. If I do know I need to roll it, I will typically roll it on the Wednesday or Thursday before, mainly because you just never know that with the way contracts are closed that day, even if it's well out of the money and you're thinking it's just going to expire, there's the potential that it could actually be assigned and you could be in trouble, especially with a put. So I always will roll or close a day or two before expiration day. Um, so let's look at the next one and that was, I did two trades on the 10th. So I did the LEG roll, and then I sold a cover call on Southern Company, and I did it at 67.50, and it's a 26 delta, which again is a 74% probability to retire outside the money. And I made 114. Now I found recently that it's been hard, and that's only one contract. It's been hard to find good premium with the covered calls on Southern Company. Now that's just recently changed, and I was able to find some pretty good premium. I probably, in hindsight, should have done more than one contract. I think I've got more than 100 shares. So I may already have one out there, and that's why I only did one. But in a lot of cases, I would have done two, and I would have picked up 228. So, and that was on the 10th. Yeah, and then the 16th, I did Intel. I sold a cover call to open it at 62.5. And again, I hadn't been able to find good premium with covered calls on Intel. Now that changed. Their price recovered from being hit with the negative earnings news, and it came back with a vengeance, which is nice. And this actually, the covered call was at a 20 delta, just slightly above a 20 delta. So exactly where I want it, and I picked up $124. So it worked out quite well. And Intel is another one I like. I sell puts and calls because I think I've got 400 shares of Intel, and I would be okay with owning more. It's not overpriced. It pays a good dividend for a technical company, and I think some people are down on it currently, and I think it could come back. They're planning to build some plants, I believe, in the U.S., and it's just the company I still like. It's something I grew up with, and so it's I'm constantly looking at the ability to sell more calls or buy or sell more calls or puts. So, and that was what, on the 16th. And I also did a covered call on Corning GLW, and I did that at 50 with a 22 delta. So again, a good delta, and I made 125. Now I've also, Corning has come down quite a bit, and I've had a problem finding good premium with Corning. But at this point, when the market, I believe this is one of the times the market went way up, I was able to earn some pretty good premium. And both of these were a little farther out. So Southern Company more like 6 months, 5/20/22, and it's 6/17/22. So these are a little bit longer, more like 6 month um, covered calls. But again, with something that doesn't move that much, to me, it's just icing on the cake. And it's companies I like, and I don't really want to get rid of them or to have them assigned. I want to keep them and earn the dividends. So Southern Company, I believe, pays over a 4% dividend. So, and Corning too. I believe Corning's over 3%. So both good stocks, companies I enjoy owning and want to own more. XLE, that's it's an oil-based ETF, and I sold a vertical credit spread with the 53.46. So 46 is the outer arm and 53 is the inner, and it's at a 19 delta, so it's actually a little less risky than what's typical. And I was able to get the outer arm for cheap, so I think I only paid $14 per contracts, and I did two contracts here, and I made over $109 with two contracts, so not bad. And that was on the 17th, and that's the only trade I did on the 17th. Now on the 18th, I did Cisco, and I did a vertical credit spread, and I've been trying to pick up Cisco again. Another great company. It's got good earnings, pays a good dividend, and has fairly good growth. Um, it's not way out of it's not, when you look at some of the big tech companies, they're so expensive. Cisco is not. It's actually a good value. So here I did a little more risk. So it is at a 30 delta, so a little bit more risk. And I did two contracts, both expiring on December 17th. And I made $129. So not bad. And if that gets assigned, I'm perfectly happy. I believe actually it expired out of the money, because I believe Cisco's gone up consistently since then. I believe it's now as high as 60 and maybe in the 60s now. Next one, which I only did on the 18th, that was my only trade with Cisco. The next one is ExxonMobil, and I did that on the 19th. I did a 55.45, expiring 122.22, so more like 60 days. picked up some good premium. Did two contracts. The delta was negative point 0.2 or, not, or 21 delta. Don't really need to worry about the negative with the puts. I still put it in because that's how it's typically displayed in the systems. But for those two contracts, I did 149. Now you'll notice that one of the ways I kind of, as I've gotten more confident, I've done more contracts, but I typically will only do one to two contracts. I may look at doing three contracts in the future to bring in a little more, especially if it's something I want to own and it's not too expensive. So that's ExxonMobil. It's the only trade I did on the 19th. So again, on and off pretty quickly. Now I did another cover call for Coca-Cola. So I won't go into detail. It again expiring on the 20th of 22, and I made 176. So good money for selling covered calls on Coca-Cola. So what I end up doing is I have a chain where I try to have anywhere from no more than two calls expiring on any specific expiration day. So if I have one, meaning I close one because it gets becomes so profitable, then I'll usually sell another one, but I try not to have more than two expiring on any particular day. And it's kind of my way of kind of doing more covered calls. I also um, I try not to have too many outstanding. I don't want to go over half of the number of shares that I own. So, if I think I own 44, well, no, I own 4,400 shares. So that's 40, I could have 44 contracts. And I think total I have like 22 contracts. So for now, that's enough with Coca-Cola. So this next one is really interesting, and it's on the 23rd. I do want to mention one other thing about Coca-Cola. It was the only trade I did on the 22nd. So now on the 23rd, I've been teaching my 18-year-old son how to trade, and he turned me onto SWBI, which is Swiss and Wesson, and I decided to sell a cash secured put on it. Did a 22 delta at 20, and being it's so inexpensive, and I made 112 on it. So this is a trade my son brought me, as we were discussing how to actually do trading. He bought a share so he could track it and learn about it. He actually bought three or four. He also bought Ford and I can't remember who else, but it's given me a chance to spend time with him and teach him how to invest. So, and I believe, yeah, that was the only trade that day. So now we come to the 30th, which was the crazy day, where the market took a huge dip. On that day, I did a credit spread, um, and I had a lot of times what I'll do is I'll close. Um, so for DVY, I had closed um, the inner arm before because it was so profitable, but there was no value in the outer arm, so I left the outer arm. Well, since then, um, DVY went down so much that day, I was able to sell another call on that same expiration day, and I already had the outer arm, and I was able to make 150 with that. So that's something I'd never done before. I think I shared in my previous video, or maybe it was two videos ago, that I close anything that's at least a 90% profit. So every day, first thing I do when I log into the market is sort all my options. I look for anything that has a 90% profit. And that's what happened. DVY had a 90% profit. So I went ahead and closed it. And it gave me this opportunity to just sell the inner arm and make additional premium because I still had that outer arm, which was interesting. I'd never had that happen before. On the same day, eBay is an investment I've been wanting to own, and it went way down that day. And I sold a vertical credit spread with the inner arm at 62 and a half and the outer arm at 55, and not a whole lot of risk, below a 20 delta. And I did two of these, and I ended up making 109, which isn't bad. And eBay is something I've been looking at for a while, and it's just been so expensive. So if I could get it at 62 and a half, it's a good value at 62 and a half. I believe it's traded as high as 80 lately. And I just like eBay. I sell a lot of stuff on eBay and have over the years. And it's of all the, I probably have used it more than stuff like Facebook Marketplace and even Amazon. I will buy on eBay if I can. I can find better deals on eBay than I can on Amazon at times. And then the last security that I sold was one I've been wanting to own for a long time, which is Schwab, which I love Schwab since I use them to do all this trading. And I sold a 70 strike expiring on 121.22. Again, a low delta, 21, about a 22 delta. So a little more risk than usual. I only sold one contract, um, and I picked up $150, but that's really good for one contract. And again, something I would really like to own. I believe it was as high as 80 or 90 fairly recently. So in the big drop that day, the premium was so good. So I believe before I've been looking at it, I could never make more than 40 or 50 on one contract. So the premium on that Friday after Thanksgiving was pretty amazing with a lot of the stuff I was looking at that day. And that was the busiest day. I did 3 trades and I didn't spend much time because I think I had other stuff I had to do. I literally got on and got back off and were able to do those trades. So total, I did 2610, which was one of my better months. I did 2600 last month, and I believe the month before that I did close to 2300. So I've been pretty consistent to be around 2500 a month, and that's my new goal. I'm going to try to consistently get $2,500. That's 137 per trade, and you can see I did 19 trades. The average is a little bit lower. You'll notice here that I shared, which this reflects anything I closed because of 90% profit. And I believe I closed, 5 positions, which were, again, has continued to work out really well. It means I can make a little bit more with my trades. And November was kind of an interesting month with it going up and down so much. And then this is just showing if I look at it, it's about a 0.5% per month is if I base this on my total account. Now I'm basing it on the total value minus cash, but that might not be the right way to do it. If I based it on just the cash, especially since I'm primarily selling puts, then that would be a lot higher. But on a yearly basis, it becomes pretty close to 5 to 6% yearly and 0.5% monthly. So for a $500,000 account, it's $2,500, 2,600 is 0.5%. And in my retirement, I've been able to do a little bit more, but the selling Ark for a loss will change that. I won't take as good of a profit because of that big loss this month. I'm hoping to break even this month, but we'll see. I'll do a video on that so I can share with you guys where I stand at the end of the month after taking that loss. So I did 19 total trades. 9 of those were covered calls, and 10 of those were primarily put credit spreads, but some cash secured puts too. I only rolled 6 trades out of 19, so 13 were new trades. And then again, the busiest day was the 30th after Thanksgiving, which is kind of crazy. And I believe I remember that day because the market was down so much and I had places to be. So I don't think I spent more than 30 minutes and I made, what is that? Over $400. Is that right too? Yeah, over $400 in the day after Thanksgiving in about 30 minutes. So that's where you can really make some rapid income quickly, and I just like how the passive way this is, how you can quickly make some income if you need it for a specific thing. So that's it. Those are my trades for November. December is looking a lot like this month. I believe I'm already at 2,200 and I'm only halfway through the month. When I get to, for December, the fact that I'm already at 2,200 and I like to keep it between 2,500, 2,600. I probably, with Christmas coming up, I won't do a whole lot of trading between Christmas and New Year's. So I probably a couple more trades and that'll be it to get me around that 25 or 2,600 point. So thanks for joining me. As always, please subscribe, hit that like button. Check me out on Patreon. I've got links below. Plus I'll have a link to anything that might be of importance that I discussed in this video. And as always, happy investing and have a great day. Bye-bye.